Today was a big day in my portfolio. I sold under 100% of one of my stocks. And if you've ever been in the investing world, you know that's not a decision you take lightly. There's always that little voice in your head asking, are you sure? What if it keeps going up? But here's the thing to investing isn't about chasing FOMO or trying to hit home runs every single time. It's about strategy, patience, and knowing when to act. And today, I acted because I knew this was the right move. When you look at the market objectively, there are moments when holding on is actually riskier than letting go. I spent weeks, even months, analyzing this company, tracking its earnings reports, investment, observing its growth trajectory, and understanding where the market was heading. And here's what I realized: the risk of holding outweighed the potential reward. It wasn't about fear, it was about logic. Selling wasn't giving up. It was protecting the capital I had worked so hard to grow. The first lesson in moments like these is understanding that investing isn't a sprint, it's a marathon. You can't let your emotions dictate your actions. Greed can make you hold on to a stock long after its prime, and fear can make you sell too early. Both of these extremes hurt your portfolio more than the occasional market fluctuation ever will. Today, I made a decision that balanced courage and caution, and that's a lesson every investor needs to internalize. Another key takeaway from selling today is recognizing the value of reallocation. Investment. Money sitting in one stock isn't always working as hard as it could be. By selling, I now have the freedom to redistribute that capital into other opportunities, stocks with better growth potential, safer investments, or even cash reserves that give me flexibility in uncertain times. The market is full of opportunities, but they aren't all in one place. Smart investing means constantly evaluating where your money can do the most for you. Finally, this move reinforces the importance of mental discipline in investing. It's easy to get caught up in headlines, speculation, or hype, but true financial growth comes from calm, calculated decisions. Selling today wasn't an emotional reaction. It was a strategic choice rooted in analysis, experience, and patience. And honestly, that's what separates successful investors from those who struggle. They know when to act, when to wait, and how to stay rational under pressure. So as I closed out my position, I didn't feel regret. I felt confidence in my process, in my research, and in my ability to make smart moves in the future. Selling 100% of this stock today isn't just about this one transaction. It's about understanding how to navigate the market, protect gains, and set yourself up for long-term success. And that, more than anything, investment is what smart investing is really all about. When it comes to investing, the decision to sell a stock is never simple, especially when you've already experienced gains and growth from holding it. Selling 100% of a position in a stock might seem drastic to some, but in reality, it's often a reflection of careful analysis and strategic thinking. A good investment. One of the most important aspects of being a successful investor is understanding why you hold a stock in the first place, and equally importantly, why you might sell it. In my case, the decision to sell was not impulsive or emotional. It was the result of a deep dive into the company's fundamentals, market trends, and my own financial goals. Every stock you hold represents not just money, but an opportunity cost. When I analyzed this particular investment, I realized that the potential upside was starting to diminish, while the risk factors were becoming more pronounced. Market conditions were shifting, the company's growth trajectory was beginning to show signs of plateauing, and there were early indicators that external factors, such as competition and regulatory pressures, could impact performance in the near term. As an investor, it's crucial to stay ahead of these signals. Can waiting too long to act can mean watching your hard-earned gains erode or even turning a profitable investment into a loss. Selling a stock is never just about the number on the screen. It's about aligning your actions with a long-term strategy. I looked at my broader portfolio and considered diversification and exposure. No matter how much you believe in a company, having too much capital tied up in a single stock is risky. Portfolio management is as much about reducing risk as it is about maximizing returns. By selling 100% of this stock, I was able to rebalance my holdings, freeing up capital to pursue other opportunities while simultaneously protecting the gains I had already realized. This is one of the most important lessons in investing. Sometimes the smartest move isn't buying more. It's stepping back and relocating intelligently. Another factor in my decision was valuation. The stock had performed exceptionally well over the past months, reaching levels that, in my analysis, were beyond fair market value. When a stock becomes overpriced relative to its earnings, growth potential, or intrinsic value, it becomes more susceptible to corrections. Holding it purely out of hope for continued growth is risky. A disciplined approach involves recognizing when an investment has reached its optimal point for exit. Selling at the right time isn't about timing the market perfectly. It's about making informed decisions based on evidence, trends, and careful calculation rather than emotion or speculation. Finally, selling the stock was a reminder that investing is about more than chasing the next big win. It's about strategy, patience, and financial self-discipline. Investment. By taking a step back and objectively assessing the situation, I could make a decision that was rational and forward-looking. It's easy to get caught up in excitement or fear, but the investors who succeed are the ones who consistently make thoughtful choices, even when it means making bold moves like selling an entire position. Today, by selling 100% of this stock investment, I reaffirmed a principle that guides all of my investment decisions: always act with intention, always prioritize long-term strategy over short-term emotions, and always protect your financial future. One of the most important reasons I decided to sell 100% of this stock is the concept of maximizing gains and minimizing losses, which is often overlooked by many investors caught up in the excitement of market momentum. It's easy to fall into the trap of holding a stock because it's done well historically, or because you feel like you're missing out on further growth. But the truth is, investing isn't about hoping. It's about making calculated, rational decisions that protect your portfolio while allowing it to grow. By selling today, I was able to lock in profits that I had worked hard to achieve and avoid the risk of potential downturns that could eat into those gains. When you own a stock, every day it fluctuates carries both opportunity and risk. There's a natural human tendency to let greed take over, to think that the stock will continue to climb indefinitely. But the reality is that no stock rises forever. And the moment you start ignoring warning signs or overestimating potential upside, you're exposing yourself to unnecessary risk. By selling 100% of my shares, I mitigated that risk and ensured that my portfolio remained strong even if the market took an unexpected turn. This kind of proactive decision making separates serious investors from those who rely solely on luck or hope. Another aspect of maximizing gains is understanding the importance of timing. You don't need to time the market perfectly, but you do need to recognize when a stock has achieved significant growth and when the probability of continued growth is lower. In this case, after closely monitoring earnings reports, market sentiment, and broader economic indicators, it became clear that the stock had reached a point where holding on could jeopardize the gains already made. By acting decisively, I was able to convert potential profits into actual realized gains, which is a critical distinction that every investor needs to understand. Paper profits are only useful when they can be transformed into real capital that you can use to grow your portfolio further. Minimizing losses is just as important as maximizing gains. While this particular stock had performed well, no investment is without risk. Markets are unpredictable, and even strong companies can experience sudden downturns due to unforeseen events. Selling today was a strategic move to reduce exposure to volatility. By taking profits off the table, I ensured that my portfolio could weather potential market shocks without suffering significant setbacks. Risk management is often undervalued, but it's what keeps investors in the game for the long term. A disciplined approach to selling and taking profits is just as important as knowing when to buy. Finally, the act of selling reinforces a broader mindset of financial discipline. It's a reminder that investing isn't about chasing the highest returns in the shortest time. It's about creating a sustainable strategy that consistently grows wealth while managing risk. By prioritizing gains and protecting against losses, I'm able to maintain a healthy balance in my portfolio and set myself up for future opportunities. Selling 100% of this stock today wasn't about fear or regret. It was about making a deliberate, strategic choice that aligned with my long-term financial goals. In investing, that kind of clarity and discipline is far more valuable than chasing every potential upside. After selling 100% of a stock, the next natural step for any serious investor is to consider portfolio reallocation and future opportunities. Selling a stock doesn't mean the journey ends. It means that you now have the freedom and flexibility to redirect your capital into other investments that align with your long-term financial goals. One of the biggest mistakes investors make is holding on to gains in a single stock without thinking about how to optimize the rest of their portfolio. By selling today, I created liquidity investment, which is one of the most valuable assets an investor can have because it opens doors to opportunities that wouldn't be possible if all the money were tied up in one place. When reallocating funds, the first step is always to reassess your risk tolerance and diversification strategy. No matter how confident you feel about a particular stock, concentrating too much capital in a single investment increases risk unnecessarily. Diversification isn't just a buzzword, it's a practical tool to protect your portfolio from volatility while capturing gains across multiple sectors and asset classes. After selling this stock, I was able to allocate funds into a combination of safer investments, such as index funds or blue chip stocks, while reserving a portion for high potential growth opportunities that have emerged in the current market. This balance ensures that my portfolio can continue to grow steadily without being overly exposed to any single risk. Another key consideration in portfolio reallocation is timing and market conditions. By having cash on hand from selling, I now have the flexibility to take advantage of market dips or undervalued opportunities. Many investors miss out on significant gains because they don't have liquidity available when opportunities arise. Selling a stock at the right moment not only secures profits, but also positions you to invest in higher value opportunities down the line. In essence, reallocating funds is about staying proactive and adaptable. The market is constantly changing, and having the ability to respond strategically is what separates successful investors from those who are reactive or stagnant. Reallocation also involves prioritizing investments that align with long-term goals. Every dollar in your portfolio should serve a purpose, whether it's for growth, income, or risk management. By selling this stock, I was able to evaluate my overall portfolio and identify areas where my money could work harder. For example, investment. Allocating to stocks with strong growth potential or reinvesting in sectors that are currently undervalued allows me to maximize returns over time. This strategic thinking is critical because investing isn't just about short-term gains. It's about building a portfolio that can generate wealth consistently over years, if not decades. Finally, selling and reallocating reinforces the importance of strategic flexibility in investing. Markets are unpredictable, and no single stock or strategy is infallible. Being able to adjust your holdings, take profits when appropriate, and redirect funds to where they can perform best is a hallmark of disciplined investing. Selling 100% of this stock wasn't an exit from opportunity, it was a step toward greater opportunity. It allowed me to lock in gains, reduce risk, and position myself to capture even more value in the future. By approaching investing with a mindset focused on flexibility, discipline, and forward thinking, every sale becomes a chance to strengthen your financial foundation and move closer to long-term wealth goals. One of the most overlooked aspects of investing is the emotional and psychological discipline required to make sound financial decisions. Selling 100% of a stock is not just a technical move, it's a test of your mindset as an investor. Markets are inherently unpredictable, and human emotions like fear, greed, and overconfidence often drive poor decisions. Many investors hold on to a stock for too long simply because they are emotionally attached or because they fear missing out on potential gains. On the other hand, some sell too early out of panic, sacrificing potential profits. The key is learning to recognize these impulses and acting with rationality. And that is exactly what guided my decision to sell this stock today. When you remove emotions from the equation, investing becomes far more strategic. Selling a stock isn't about regret or panic, it's about clarity and foresight. In my analysis, I considered multiple factors: market conditions, company fundamentals, valuation metrics, and my own portfolio goals. Each factor pointed toward a rational decision to sell, despite the natural temptation to hold on in hope of continued growth. Emotional discipline allowed me to view the stock objectively. Weighing potential risks against rewards without letting excitement or fear cloud my judgment. This is a skill that every serious investor needs to cultivate because without it, even the most profitable opportunities can be undermined by irrational behavior. Another crucial component of emotional discipline is resisting the urge to follow the crowd. When a stock is trending or news outlets highlight its performance, it's easy to let social pressure dictate your decisions. The temptation to ride a wave of hype or panic is strong, but experienced investors know that long-term success is rarely achieved by following the masses. By sticking to my analysis and trusting my own research, I avoided falling into this trap. Selling 100% of the stock was not about succumbing to fear or greed. It was about acting in alignment with a disciplined, rational approach. That kind of mental fortitude is what allows you to navigate the volatility of the market without losing sight of your financial goals. Emotional discipline also plays a role in long-term wealth building. Every time you make a calm, thought-out decision, you reinforce habits that compound over time. Selling this stock today wasn't just a single action, it was a demonstration of a mindset that prioritizes strategy over impulse. By consistently making rational decisions, you reduce the chances of large losses, protect profits, and create a portfolio that grows sustainably. Investors who fail to control their emotions often find themselves chasing highs, panicking at lows, or abandoning strategies that have proven effective over the long term. Discipline ensures that you remain consistent, even when the market tests your patience. Finally, maintaining emotional discipline empowers you to learn from every transaction. By approaching each decision objectively, you can analyze the results without bias, understanding what worked and what didn't. Selling this stock allowed me to review my investment thesis, assess the outcome, and refine my future strategy. Over time, this feedback loop strengthens your ability to make sound choices and builds confidence in your financial decision-making. In essence, emotional and psychological discipline transforms investing from a game of luck into a structured, repeatable process that produces results. It is the foundation upon which all other investment strategies are built, and it is what ensures that decisions like selling 100% of a stock are executed thoughtfully, strategically, and successfully.